What's going on, everyone? About 71% of the S&P 500 closed up in the green today, but as we can tell by looking at today's heat map, it certainly was not all sunshine and rainbows. Some of many people's favorite stock, Nvidia, actually pulled back quite a bit today as it fell by another 7%. And at this point, big bad Nvidia is actually officially in correction territory, as the past couple trading days have definitely been pretty nasty for this one. But either way, we have a lot to talk about today as the market is heating up big time. And what's pretty exciting is that we're seeing an increase in volatility right now, and we're seeing movement to the upside and the downside, which should make for some pretty great opportunities in the short term. I know when stocks are just constantly going to the upside every single day, like they basically have been over the past couple months, it is definitely easier to get caught into that euphoria and hype. But when stocks start to pull back, that's when real traders truly stand out. So I am super excited for the rest of this week, and today was a great start already. So let's jump right into it.
Yeah, it definitely was. And NVIDIA is really the big talk today, right? I know a lot of people might not want to talk about it because it ended up being down 6%, but that's what a lot of people were actually watching today. Was NVIDIA selling off was pretty rough. Even in pre-market this morning, it was having some pretty bad price action to the downside. A lot of people thought it might end up holding around 120, and then towards the end of the day, we ended up breaking below 118, and in after hours, now we're sitting around 117, right? It just never stopped all throughout the day. And of course, not all the tech stocks were equal. Like if we go back to the heat map, there were a few that stood out, but for the most part, there wasn't a lot of good movement today. Microsoft was down. Google was down. You can see all the other red names like AMD, AVGO, Qualcomm. A lot of the chip stocks and just tech stocks in general were having a pretty rough day, but the rest of the market was actually good, Mike. And I think that what we're starting to see is a bit of a rotation maybe out of some of these companies like NVIDIA. And I don't know, there's been a lot of selling pressure with some of these companies lately, and even a lot of insiders selling on NVIDIA too.
Absolutely. So a lot of people look at Nvidia right now and they're like, why is it falling? What's going on? And, realistically, guys, a lot of this is just normal price action, but a lot of it also has to do with the fact that the stock is up a ridiculous amount from, just the past couple of years. From like the low point to the high point, just over the past couple of years, the stock is up close to 1,200%, which is quite a bit. So, if you want to participate in the upside that comes along with a stock like Nvidia, you also have to be willing to, weather the storm when times aren't as great. But either way, the stock is having a pullback right now. And some of the things that a lot of people have been talking about lately is how some of their insiders are selling shares. There have been numerous insiders at Nvidia that have been selling off their shares, including their CEO. But at the same time, you can't really blame the CEO here and many of these employees, as the stock is, increase so much. Like you would probably sell if you were in their position as well, and some of these sales were scheduled. Regardless, people look at the news and kind of look at the stock in a way as if it's extremely bearish. And while insider selling isn't necessarily the best news ever, it's certainly not the worst news ever either. And, it's almost kind of just a normal part of, how the stock market is. Insiders will take profits, especially after the stock has increased by 1,200% over the past couple of years. But anyways, looking at the stock right now, what we really are seeing is a shift in momentum. As we all know, no stocks can just go magically up every single day. There are pullbacks along the way, and the most important thing above everything else in a situation like Nvidia is truly understanding the position and exposure you want with this company. For example, if you believe in Nvidia and you plan to hold this company for 50 years, then short-term fluctuations shouldn't really mean too much to you. However, if you're someone who says, they have a long-term point of view on Nvidia, but you get tempted to sell out when, times aren't good, then you really have to look at the stock and truly decide if you're in this for the long term or if you're just trading this for the short term. Because what we ultimately do not want to see, and because I've seen this time and time again, especially over the past couple of years, is when you have a stock that gets popular, like Nvidia or Tesla or something like that. You have a bunch of attention that goes towards it and a bunch of people who buy into the stock. And, there's nothing wrong with that. But you just have to make sure that if you truly do have, like, let's say a long-term perspective, then you have to trade in a way that aligns with that. Because what most people do is they buy into the stock when it's going up, and then as soon as it starts to pull back, it's almost as if their perspective changes. And what you have to keep in mind is that when stocks are going up, you'll see great news everywhere about the company, but as soon as it starts to fall, the mainstream media and just the rest of the news sources will flip pretty quickly, so keep that in mind.
Yeah, and we've been starting to see that with NVIDIA a little bit as they talk about these insiders selling and just looking at, the overall possibility of a pullback. I know that there's a lot of new articles that came out today, obviously, with the stock being down 6%. A lot of analysts are like, hey, is this rally over? Of course, not every single one is the same, right? But you guys get the point. There's a lot out there like that. And with NVIDIA in the short term, Mike, I definitely agree with you. Like, if you're a long-term player on this, you should not be too worried about this short-term pullback. And I'm sure that there's a lot of viewers out there too that actually own NVIDIA a lot lower, like under $100. So this pullback isn't too negative yet, but as it starts to pull back a little bit more, it could get rough. And people keep asking me, like, Tom, where do you think it's going to pull back to? I'm just more of an objective person with NVIDIA. I just kind of like to follow the money and the momentum. So in the short term right now, I'm definitely looking at it to the downside, but there is this big support coming up right around this 117 and 118 area. This is going to be huge. And there's actually millions of shares stacked up here on the book map as well, right around that 118, 115 area. Even 117 and 116 have quite a few there, but I saw over 1 million shares at 118 and over 1 million at 115. So those are going to be a couple big supports to watch for over the next couple of days.
Sounds good. And another thing is, even if you don't own NVIDIA, which is completely fine, you have to understand that this stock has such a crucial effect on the overall market. Like we said, 71% of the S&P 500 was technically in the green today, but NVIDIA and a handful of these other big tech stocks were somewhat deep in the red, and that actually made the market as a whole finish in the red. So you definitely have to keep that in mind. What NVIDIA does has not only a giant influence on, of course, the stock itself and stocks in its industry, but even the market as a whole. So keep that in mind. But Tom, you also mentioned about a potential rotation in the works, and I saw that Bitcoin actually had a pretty rough day today. So what is the story with this one?
Yeah, it's definitely pretty rough in the short term for Bitcoin here, Mike. And I hate to say it, but Bitcoin is under $60,000 once again, right? That is a pretty big statement to make. I know that it's been under 60,000 over the past few months a couple times. If we go out to the daily chart, Bitcoin was actually dipping down quite a bit in April and came down and touched 57,000 and ran back up. So I will be watching for that over the next couple days, as that looks to be a pretty big support past 60. But Mike, it's never good whenever you see Bitcoin underneath $60,000 like that. And you guys can kind of tell by the chart here that the selling pressure is heating up quite a bit. Even the last time Bitcoin pulled back towards 60, it wasn't as straight down as what we're seeing here over the past couple of weeks. So there's a lot of inflows here to the downside on Bitcoin, and there's a bit of a double top on the chart too. So I don't know, Mike, traders might be looking to take some profits here, kind of like what we're seeing with NVIDIA a little bit.
Yeah, we shall see. And check this chart out too. So we can see that, as we all know, Bitcoin is quite a wild security. And we can see that, while Bitcoin is down a decent amount in the short term, it is absolutely nothing compared to its historical average. We can see that when Bitcoin does pull back, it is pretty common to see it pull back by 50% or even a lot more. So whether you're looking at Bitcoin or NVIDIA or, quite frankly, any other volatile stock or security out there, if you're someone who likes to participate in that exponential upside potential, you also have to be ready to handle the drawdowns and the pullbacks when they do happen. And the key reason I keep bringing this up is because time and time again I see all these people who are so eager to play the move up, but as soon as the pullback happens, their entire thesis crumbles. So let's make sure to deploy smart, disciplined, long-term, and sustainable trading habits, because the way in which you trade will make so much more of a difference over the long term than what you trade in the short term. It's all about having good long-term habits. That's what we talk about all the time. So I just wanted to throw another reminder out for that. But as we've been saying over the past couple of days, or even over a week at this point, Tom, we are heading into that time of the month where it gets pretty shaky for the market. So we can see by looking at this chart here, we are towards the end of June right now, and that does tend to be one of the weaker parts of the month. And it has held true so far, but just keep this in mind over like the next couple trading days that, most of the time, the end of June isn't all that great for the market.
Yeah, and I know that this year the market hasn't necessarily had like the best moves historically, right? Like it's been doing very well, right? It's doing very awesome and actually blowing historical data out of the water. But I will say it's been pulling back pretty well since we started looking at this historical data here for June. And the next couple days, the 25th, 26th of the month could be that bottom end there. And, with all the selling pressure mounting, it might even go towards the 30th. We'll just have to see. But the next couple days are historically still pretty bad. So keep that in mind whenever you're looking at the market over the next couple days. It's just another negative thing that we're seeing in the short term. And, the SPY's still pretty close to all-time highs in reality, right? It's not like the market's necessarily having a major correction yet like NVIDIA is, but from the all-time high, SPY is down 1.5%. So, it's not like we're out here, a lot of people are going to be in the comments, Mike. They're going to be saying, "Oh my gosh, these guys are paid by the hedge funds to make the stocks go down or something," right? Like, guys, like we're just being realistic, right? Like there's short-term pullbacks, and we're looking at that in the short term here. It's not necessarily always, something conspiracy theory like that.
It's as simple as this. A lot of times the stock market goes up, but sometimes it pulls back, and you have to be ready and prepared for those pullbacks because it's easy to make money when stocks are going up every single day, but where traders truly separate themselves from those who succeed to those who fail is how they adapt when times aren't as good. And, we're seeing a pullback right now, and I'll tell you, Tom, I've seen some people pretty freaked out and just based off the pullback we've seen already, when in reality, as we could see just by looking at that Bitcoin historical drawdown chart, or quite frankly anything else, you have to be willing to handle this volatility when it goes in the other direction. So that's the main reason for it. Remaining adaptable is the best thing that any trader can do. But another thing worth keeping in mind as we look at the market right now, there was some pretty interesting data that has been coming out that's showing that credit card delinquency rates are moving pretty high pretty quickly, especially relative to like auto loan delinquencies and even mortgage delinquencies. So I guess just keep that in mind. And what this ultimately shows is that, while the stock market's doing pretty well, there are some signs in the economy that certainly aren't looking the best. And I think this credit card delinquency data definitely shows a lot.
Yeah, I've seen that there's a lot of debt right now, and of course, the delinquency rate is high, so it's definitely not a good sign whenever you're seeing that. It's another negative thing on the market, Mike. You're not helping us out with the conspiracy theorists out there, Mike. But no, I'm just kidding. But nonetheless, it is some concerning data, right? And I know that whenever the Federal Reserve and Powell, whenever they talk, they actually bring this data up a lot about credit card delinquencies, and sometimes he'll get asked questions and stuff like that about these and how people are doing right now. And, it's a lot of times, a lot of the lower class and stuff obviously gets hit the worst during times like these. And so I'm not really too surprised to see a slight uptick in these delinquencies, but it's just not good, right? Whenever you have the market falling and you're seeing bad data like that, it's just never a good combination, but interesting data nonetheless. And I will say I did see banks were actually pretty good today out of everything, since we are talking about credit cards and etc.
There we go. All right, Tom. So let's say we jump back to the SPY for 1 minute. What are the key levels to watch for the upside and the downside for tomorrow?
Yeah, so yesterday I actually talked about that key 544 support. That held up quite long today, almost all day. That ended up holding up as support, but right around the end of the day, we broke right under there, almost hit 542. And that's a big area of support that I have on the chart, is 541.50 to 542. So I'm definitely going to keep that in or on watch for tomorrow. If we do break below there, I think 540 will be the next major level on the chart. I think that's the most major level in the short term coming up. But underneath there, Mike, the next major support's down around like 537. So there's a bit of a gap there, like where the market had that big jump back on June 11th or June 12th. So definitely have these levels on watch for the SPY. To the upside, there is a whole bunch of resistance. Now we have to use 544, 544.50, 545.50, and 546. And you can see that there's been a lot of hits off of all those levels recently, as the SPY was pretty choppy the past few days.
All right, sounds good. Well, Tom, I think it's now about that time to get into the good stuff, which are some setups and predictions for tomorrow. A stock I'm watching pretty closely right now is Oxy, and it is to the upside. So OXY, basically this sector just crushed it today. There were a lot of like energy-related stocks that moved in a pretty good way to the upside. We can see ExxonMobil, Chevron, and a handful of other ones just moved in a very strong and consistent way all day long, which is really great to see, and it really shows some persistent buying pressure. Like when you look at that intraday chart of Oxy right now, you can't really ask for much more. But either way, I'm looking at OXY potentially to the upside for tomorrow. What I want to see more than anything else is a continuation in this style of price action. There isn't a specific level I'm looking for with this one. I just want to see a continuation of this bullishness. If we do see that, Oxy does have more potential, but at the same time, let's say Oxy opens up tomorrow and it starts selling off really hard from open, then there's no need to force a trade like this. So keep that in mind. There's opportunity, but let's make sure it continues to show strength tomorrow.
Yeah, that's going to be the name of the game, right? Momentum. And there was definitely a lot there today. If you see some big green candles like that at open, I'll definitely be watching the oil stocks very closely myself as well. But with my first play, I'm actually looking at the NASDAQ, Mike, QQQ. To the downside here. There's a pretty big support the QQQ started to run into around the end of the day, right around 475. And I love the way it broke down there. So I'm going to be looking for a continuation down tomorrow out of this as well. And just looking to maybe capitalize on the overall downside move with Apple, Tesla, Nvidia, all these stocks that are starting to get a little bit shakier in the short term, right? Apple tried to actually run today and ended up having a massive pullback towards the end. So if we continue to see these tech stocks go bearish into tomorrow, I'll definitely be watching the QQQ for a continuation down, and more importantly, Nvidia, right? That's going to be the main one on watch, but we've already talked about that one so much tonight.
All right, sounds good. Another stock I'm watching pretty closely right now is Netflix, and it is to the downside. So this stock has been moving in a very strong way for some time now, and it's getting to the point where there is a lot of resistance overhead. We can see it's right back to that area. Like if we went to like a daily or weekly chart and we zoomed out, it is right back to that resistance area, right around its all-time high back in November of 2021, right before it had this massive pullback. So, this upcoming zone is pretty strong. And on top of that, we're starting to see the market weaken a little bit as well. So looking at Netflix, I should say, I really like the risk reward to the downside. Realistically, a stop loss might be set around that 693 area or so, where profit targets can start at like 626 and go all the way down to like the $600 level. So I really like that risk reward, and Netflix will definitely be on my downside radar, one for tomorrow, but even like over the next couple weeks and months for a potential like medium term play.
Yeah, I like it to the downside, Mike. A few of these stocks are just getting a little bit overextended, and I like that resistance that you showed there on the daily. It looks pretty good. With my next play, I'm looking at Nvidia to the downside, right? We just can't stop talking about Nvidia tonight, but it's down 6.68%. I did bring up the book map earlier, so I'm going to keep looking for a continuation down below 118 tomorrow. If we see it, then I will be looking at it down, of course. If we do see a nice pop back to the upside, I might even have to adjust, and end up looking at it back up. Right now, I don't see too close on the book map in the short term, so I'll be looking for more levels there tomorrow. You guys can join up the Discord and go ahead and ask me, but I'm really looking for a breakdown below 118 and continuation towards 115 as this stock starts to fall off just a little bit more.
All right, well, sounds good there, and with that being said, let's jump right into today's momentum plays. And with the first one, we have SoFi to the upside, which had a pretty good move.
Yeah, SOFI up 3.48%. A lot of these stocks today that I would almost call rotation stocks did very well. So if SoFi breaks out above 6.58 or 6.60, watch it up.
Sounds good. With the next one, we have Chewy also to the upside, and this one just keeps on running.
It really does. 5.8% again today, broke above the high of last week. If it ends up running above the high of today, right around 27.50 to 27.55, then watch it up. I really do like 27.50 as resistance, but it broke slightly there at the end of the day.
All right, sounds good. And then with the last one, we have Apple for both directions.
Yeah, Apple was pretty shaky today. You know, it ran up a lot this morning, and I was really surprised at that move. And then I got even more surprised that it recovered all the way back down because it had the craziest move on Friday. But if it falls under 207.80, then keep watching it to the downside. If it ends up breaking back out above 210, then watch it up.
Sounds good. So we have the upside level for a potential move higher. We have the downside level for a potential move lower. That's with Apple. Don't forget about Chewy and SoFi as well, both of which with upside potential. But as we look at these three stocks, they were only potential day trade setups tomorrow if they break through the levels Tom listed. What we ultimately want with these stocks is powerful, strong, consistent price action. And if that is not what they do tomorrow, then do not feel the need to force these setups. The goal is for them to break through the resistance or support levels Tom listed and then continue to move in a momentum-filled way in that direction. So keep that in mind for tomorrow and keep these stocks close on watch. And besides that, let's jump right into today's $600,000 big money trade, and we are looking at ticker symbol MCD, McDonald's. I'm sure everyone's heard of this one, but basically looking at McDonald's, the big money put around $600,000 into the 250 strike call options that expire on August 16th of 2024. These call options are already in the money. They have some time to them. We've been seeing a pretty good rotation lately out of big tech and into more value-related stocks, so that definitely helps. And at the same time, if we were to zoom out on the McDonald's chart, this $250 level has been a pretty key point over the past couple of years as a just major pivotal area, so that definitely helps a trade like this one. But either way, keep McDonald's close on watch.
Yeah, it's very interesting. You know, they've had that news like with Krispy Kreme rolling out across the country. I know that that's supposed to be happening soon. And, you know, they've been talking about a few different things like their $5 meal deal that they're going to be doing, I think, coming up soon, too. So that's going to be pretty interesting. But nonetheless, I do like the support quite a bit around 250. I personally like this big money play quite a bit, Mike. I know it expires in about, you know, a month and a half, August 16th. So it's kind of a shorter term one. But I do like the support and the short term price action. I'm a little worried about like some chop here over the next couple days, but for the most part, I'm watching this resistance around like 262. And once we start to get a solid breakout there, I think this could be a pretty good continuation. So hopefully we see that breakout sooner rather than later, but I like this big money play quite a bit. I know that there's not like $5 million in it or anything like that. It's only 600,000, but still pretty decent.
There we go. But Tom, I know this week's earnings and economic schedule isn't necessarily the craziest, but what should we look out for?
Yeah, tomorrow we do have Carnival Cruise Lines before the market opens. That could be pretty big, obviously, for that sector. Maybe even airlines will get some movement out of that. I know sometimes they move as like, you know, they're kind of like travel stocks as well. But definitely watch for a movement out of the cruise line sector like CCL, NCLH, and a couple others. FedEx will be reporting after close. Of course, Wednesday is going to be the really big day for earnings with Micron, which is a pretty big chip stock reporting in after hours. So that's pretty much it there, Mike. And on the economic side of things, we don't really have anything tomorrow besides just a couple Fed speakers.
Sounds great. And Tom, I have to say, I'm pretty excited with the way this week is shaping up. The price action has definitely been pretty exciting over the past couple of trading days. And I also really like the way the volatility as a whole is really increasing. And a lot of times that makes for some pretty awesome opportunities for short-term traders. So I think this week's going to be a great one, but let's make sure it's a great one by deploying smart, long-term trading habits. Step one, as always, make sure you have a plan before you enter any trade. So whether you're bullish or bearish or trading Nvidia or McDonald's or Walmart or Bitcoin or whatever the case may be, make sure you have a plan before you enter the trade. From that point, make sure you follow your plan. There's a lot of people out there who can set stop losses, but only a small percentage of them can actually respect and follow the plan after they draw it up. From that point, always make sure you're following the money to make sure you're on the right side of the market. And of course, there's other trading habits that go into this, but let's make sure to trade in a smart way this week without taking anything crazy risky, and let's make this week a great one. But before we close out, I have to give a giant shout out to today's member of the day, Benny C, and we could see he had a great post where it was one of his best days ever, and he cleared around $12,000 just off the ALNY big money trade. And he had some other trades in there as well. So huge shout out to you, Benny. Keep up the great work. And I know a lot of people did very, very well with that ALNY big money trade. And I actually talked about it in yesterday's video. Today, the stock popped up by 35%, and it was just a monster day. So that was awesome. But if you're into short-term trading, you guys got to check out the Stocked Up trading floor. Not only do you get access to all of the multi-million-dollar big money trades before they're posted in these videos, but you'll also get access to our full army of trading bots. We can see today was also a really good day on that front, as there was an AFRM call option alerted that popped up by 184%, and there were some ARM put options alerted that popped up by 42%, and our SM bot crushed it as well, as it had some DJT call options that ran up by over 200%. So it was a great Monday in the trading floor, and what we show in the videos are only a small fraction of what you actually get. You can chat with Tom and myself all day long, join our weekly live events, access our past educational recordings, and many, many other things. Basically, if you're into short-term trading, it is the place to be. And if you haven't already joined, you're in luck, because we just started a sale. Coupon code Big Money saves $100 off the yearly plan. We very rarely do sales, so if you've been thinking about it, now's the time. So coupon code Big Money. If you use that using the link in the description and the comments down below, you will save and you'll be locked in at one of the best prices out there. But besides that, thank you all so much for watching, and let's have a great week in the market.